What's up, everyone? Welcome to the Elf Crypto. We're here with the final session of market structure and powerful setups. Before we get started, make sure to hit the like button and subscribe for more insights. In this session, we move on to Chapter 7, which is about putting it all together. Bringing everything together is very important, and by combining various insights, a trader's chances of success increase. A trader should start their trade only when they have at least two signals for a trade. Now, what do we mean by signals? SMS, BMS, and stop hunt, these are all signals. At least two of these should occur in the market before you are allowed to enter a trade. If all three happen, that's fantastic. So, what are the things that traders need to pay attention to simultaneously for a trade? Higher time frame analysis, trading during the London session's opening, and trading throughout the New York session. Checking key levels in higher time frames while looking for an entry point in lower time frames. So, when you're planning to enter at a certain time, you should also review higher time frames, refine your analysis, and check again. Then we combine the setups. Also, it says you can trade during impactful news events, but that's a bit risky, though still recommended. Now, analyze the higher time frames and entry points in the lower time frames. Look at the key levels in higher time frames at your entry points in lower time frame trading setups to confirm that the higher frame analysis holds the price. What does this mean? For example, if you reach a peak in the 1 hour time frame and that same peak exists in the 4 hour and daily time frames, then it certainly has more strength since it's reacting for the first time. So what are the key levels in higher time frames? Order blocks, liquidity pools, and market structure. You need to pay attention to these three in the higher time frame. You don't have to consider all the key levels in a higher time frame for a single trade. We need two key levels, one high and one low. Now, minor levels within that high and low range can also be important for us. But there's no need to go back and review months of the daily chart, unless this is the first time in 2, 3, or 6 months that it's reaching that peak. So how do we review the setups in different time frames? For swing trading, you should find your entry point between the 4 hour and 1 hour time frames if you're looking at a higher time frame structure, like the weekly. For the daily time frame, look for entries between the 1 hour and 30-minute time frames. For the 4 hour time frame, I'd say even the 15-minute and 5-minute timeframes are acceptable. For short-term trades, if your structural time frame is the daily, find your entry between the 1 hour and 30-minute timeframes. If your structure is on the 4 hour time frame, then look for a 15-minute entry. For a 1 hour time frame, in my opinion, 5-minute entry works well. Many systems consider a 5-minute entry when the 1 hour time frame is your structure. For intraday and scalping trades, if your structure is on the 4 hour time frame, your entry point should be between the 15-minute and 30-minute time frames. If your structural time frame is 1 hour or even 15 minutes, your entry can be based on the 5-minute or even 1-minute time frames. Let's go through some swing trading examples. We're looking to buy in the turtle soup range. We have a low, meaning the SSL, it's hit that level, and it's significant because we're talking about the weekly time frame, and it's completely reversed. Now, how do you trade it? Since you're in the weekly time frame, you'll go to the 1 hour or 4 hour time frame, and here is the example for the 1 hour time frame. Lower time frame setup, stop hunt, BMS, and RTO. This is the range where this candle broke through. See here, it broke through nicely. The entire red candle is part of this downward move, and this expansion consists of several 1 hour candles. This is our turtle soup range. We have a low, but we don't trade here, we wait for some price action to happen. When I use the term price action, I mean a lot of things happening simultaneously, accumulating in the higher time frame. You see a range, the range gets stop hunted. It goes down, then it stop hunts again and goes up. They're just collecting liquidity. Then BMS breaks the structure, and instead of going higher, it comes down to the RTO level. They enter the trade, and after that, it doesn't come back down. It only makes a small pullback, which is likely due to some stop losses being triggered at this level. The next example shows a higher time frame setup in the daily time frame with stop hunt, BMS, and RTO. And yes, we also have equal lows. When you see an order block forming in a downtrend and you expect a BMS, this BMS can even belong to the 4-hour time frame, because there are only 2 candles on one side and 2 candles on the other side, unless the candles are large, in which case we can accept it based on the market context. For instance, this is not a swing, at least not for this time frame, but it's enough for this time frame. Now, when you enter here, where do you set your take profit target? We used to say, when the price reaches here, we exit. But what really happens is you entered here, and your stop gets hit. With low orders, the price comes to the next OB and reacts, and this time it breaks both of these stops. These are equal lows, so obviously it triggers a long candle, pushing you out of the market. If you're a professional, you're riding the wave. This is also a swing trading example. This was our structure. Now we're in a lower time frame to find an entry point. And here you can see a stop hunt has occurred. This is the daily RTO. When the price reaches it, we shouldn't enter immediately. We need to wait for price action to develop. Wait for a stop hunt and BMS to form. And after spotting the order block on the retrace, you enter. Again, the order block reacted. This is the order block that caused the BMS. Pay close attention, guys. Look at the momentum it had. There were definitely a lot of orders in it. And when it came closer, not only did it react to the OB, but also to the RTO. Plus, there was a stop hunt near it. What's this? This is an old high, and similarly, this is the second entry. The setup type is turtle soup with a stop hunt, BMS, and RTO. This belongs to a higher time frame. We're reviewing the structure. Look, guys, there was manipulation here too. It took out the previous highs, then dropped down and forming a BMS. On the retrace to the OB, we wait for entry, and you enter here. Look how beautifully the price action played out. There was a high, a stop hunt happened, then a BMS formed, and on the retrace to the bearish order block, which is marked by a black candle, this is where you enter. A few pips lower, you're in the market. Where's your TP? As you can see, your target is below this swing low. When you've identified something correctly, let the market do its job. Let it collect stops and take full advantage. The next example is a higher time frame RTO, and this is it. It says after the stop hunt, there's a simple RTO. We have a low and a high and stop hunt, and then this little range that's formed. If you drop down to the lower time frame, like 5 minutes, you'll see some really nice moves happening in just 5 minutes. After the BMS, when it returns to the OB, that's where the entry happens. Now, why didn't it move? Because we don't know exactly what's going to happen. We could come up with a lot of reasons afterward, but still, it provided an entry here. Now, the explanation here is that the accumulation or price action that happened in the lower time frame, whether 1 minute or 5 minutes, was because it was a 15-minute setup. If you've watched my trading videos on Telegram before, you might recall a discussion about the concept of equilibrium, which refers to the mid-level or 50% range. When the price moves within a range and then breaks out in one direction, the 50% level of that range often becomes an entry point on the retracement. This is a key point to note. In the Asian session, if possible, aim to sell at the highs and buy at the lows of the range. Here's another important point. During specific times, like the London session open or the New York session open, these can present key opportunities to enter trades. When price hits significant levels in the higher time frames, it's often a good area to assess for potential trades. Also, during major news events or high-impact announcements, the market tends to provide excellent trade setups. Now let's look at some examples. Here, a price action pattern unfolded. We had a low, then stop hunt, BMS, then a retracement, and finally an entry. And here's another similar entry. In RTM, there's a concept called an ignored level. This refers to a level or candle that the market should have reacted to, but instead, it gets overlooked. When you see a drop like this, you might not know if the market will push higher afterward. But in a downtrend, if this drop happens, you might treat this as an order block, expecting the price to react when it returns to this level. However, if the market ignores this level and moves higher, it's because liquidity is the priority for the market, not necessarily respecting certain levels. We create our own set of rules to improve our chances of success, but the market clearly came back to this ignored level, reacted, and then moved higher. In this setup, the price moved higher, created a BMS on a higher time frame, and on the retracement, we saw a stop hunt which triggered a reaction to the order block. If you look closely, you can see a low here. The price dropped down to this low, triggering an entry. This was a very distinct move. Also, as the price retraced into this range, it reacted to the order block, which was marked by this red candle, and the market proceeded with the stop hunt. It didn't take the stop hunt on the retracement, but instead said, "This is my order block, and I'm entering at the RTO." Now, in the Asian session example, a stop hunt took place with London. The price dropped, took out the stops below, and a price action pattern formed, creating an equal low and hitting the daily low, setting up for a potential move higher. In New York, the price dropped further, took out the New York low with a stop hunt, and then reversed to the upside. Here you could have had an entry at this level, and another entry after the BMS, SMS, and RTO were confirmed. What's the target? It's the stop losses above these levels. The price continues to move up, hitting each stop loss in sequence, until eventually clearing them all and completing the distribution. Now, I prefer not to go into too much detail about the last section because I have already explained many examples. These examples should serve as samples for you to understand how the market behaves. Notice how the low of the previous week was taken and consumed, essentially stopped out here. We have a stop hunt followed by a BMS after the break. On the retracement, we see another reaction, followed by an RTO, and the price moved up. Take a look at the Nasdaq chart. When there's an equal high stop hunt and a BMS is confirmed, this black candle was responsible for the break of structure. So on the retracement, that's your entry zone. Now when you enter here, where's your TP? It's below this level. You can see that it triggered the stop hunt afterward. Moving on to the next example. Once again, we have beautiful stop levels, BMS and retracement to the RTO, and then retracement to the order block in a higher time frame. Currently, we were reviewing these setups on a higher time frame. Now, if we switch to a lower time frame, we can observe an SMS forming and a BMS following it. We also see a retracement to the RTO and a valid entry. Look at how the buy order was triggered here. The stop hunt occurred, then BMS formed. The price dropped, retraced to the order block, and triggered the entry. This BMS was confirmed, and once again the retracement followed. Look closely at how the market reacted to it. Here's a key point that I want to highlight for you. The setup you see here involves a stop hunt, BMS, and RTO. Now regarding the symbols marked on the chart, it shows that when an RTO occurs on a 4-hour time frame, this represents an order block, and you want to see if it retraces to the RTO. On lower time frames, you'll find liquidity within these movements. The price action you're witnessing has been taking out stop levels one by one, until it finally reaches the order block. On lower time frames, you can see why the market was able to reach that level, even forming an OTE. Optimal trade entry between 70% and 79%, which is an excellent entry point, even though your higher time frame structure indicates an RTO might occur. Within lower time frames, all of it is price action that you can use for your entries. That's the main point. Lastly, it's recommended to trade during the London session open, the New York session open, and always keep an eye on important news. Yesterday's low, the stop hunt, and the turtle soup occurred here, where the previous day's low was stop hunted, and the market moved up from there. This is also similar. We're passing through here as well, and we're dealing with a large order block with very strong momentum. The stop losses were triggered, and the price moved up. BMS was formed retracing to the OB and OTE. Then ultimately, we entered the trade. It follows the same pattern here. On the AUD-USD chart, the RTO on the 4-hour time frame could also be redefined on lower time frames to reach this level. This is the well-known example of the Nasdaq index, and the equal highs formed with BSLs being taken. It doesn't show how to trade it, but it could be observed on a lower time frame. This is the opposite example, stop hunt, BMS retracement, and RTO. This follows the same pattern. The same applies here too. The AUD-USD setup is mentioned. It's also said that you can find it more accurately on lower time frames. We have the SMS and BMS events that occurred along the uptrend, and we also know about the OTEs. Now we have an AMD here. Consider that this is a daily candle. Imagine this is a 15-minute candle, and this is daily. Accumulation, manipulation, distribution, reaccumulation, distribution. Here we have a stop hunt, followed by another stop hunt, then the drop, with the low of the previous day being stopped out. The turtle soup happened, leading to the entry. What a great entry this was with good price action. The previous day's low was stop hunted, and this level also experienced stop hunt, which was leading to a swing formed. The price went a bit higher, making it an SMS. Now, this can be considered an SMS, but since this swing is stronger, it's regarded as such. Then, a BMS formed and ultimately the entry occurred. The stop loss was set very close. These setups are integrated, accumulation, manipulation, and the highs from the previous day, with the beginning of the London session. These examples are becoming repetitive, and you can see how the BSLs are hit. When the path and structure are clear, it becomes much easier to identify the stop losses. The first target is above this level. Try to be a bit bolder in taking your TP. This is just like the previous example. I really like many of these setups. They're excellent for stop hunting. When news is released, a stop hunt usually occurs, and after a BMS, the stop hunt is confirmed. So with the BMS after the stop hunt, the movement path is confirmed for you before the SMS is formed. This is also similar. Here we have the Asian range being stop hunted. The London Open hit the highs. Then the New York session came in and took out the low of the previous day. And look how beautifully it moved afterward. The examples came in succession. And that's it. Well done, everyone. Just practice, guys. I hope it hasn't been too boring. Wish you all a happy trading journey. Don't forget to subscribe for further updates. Thanks for watching.